the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
Bitcoin's dominance of the crypto market used to be close to 100% back in 2013 when there wasn't much competition. That dominance started to slip in 2016 as thousands of cryptos, otherwise known as altcoins, those being coins not Bitcoin, started to emerge. Altcoins became all the rage, and many were sold as part of pump and dump schemes. In other words, convinced people this new crypto coin was going to make them rich if they got in early. But of course, what happened in most cases, it made the founders rich and a lot of other people very poor. Bitcoin's dominance dropped to 36% in 2018, meaning Bitcoin's market cap was just over a third of all cryptocurrencies traded. That dominance percentage has been steadily climbing since then and is currently about 51%. The price of Bitcoin, however, appears to have stalled at between 1.2 and 1.4 million rand. It's still pretty impressive that it remains solidly above the 1 million rand mark, or $65,000, but can it hold at that level? Bitcoin enthusiasts are predicting much higher prices in the course of this year and into 2025. Many, in fact, believe it will break $100,000 by the end of 2024. So this is a good time to catch up on where we are in terms of the crypto space and crypto pricing. We're joined by Five West CEO Omar Iqbal to look at what's happening in the crypto market and what's likely in store for the rest of the year. Hi, Omar. Good to talk to you again. And we're talking to you from Dubai this time. Bitcoin's had an extraordinary run over the last few years, but it does seem that it's stalled over the last few months. What do you think is going on?
Hey, Kieran. Good to be back on and good to chat to you. I suppose following a significant rally, definitely leading up to the Bitcoin halving event, it's common for any financial asset to undergo a period of consolidation where traders are looking to lock in profits and the market stabilizes before it makes its next move. I think we saw a lot of upside when it comes to Bitcoin and other cryptocurrencies leading to the halving event, which we did predict last year, because if you follow the trend over the last few years, that's exactly what happened. So I think traders have been locking in their profits, and that's what's causing the market to stabilize a bit. But also I think why it's stalled and it hasn't gone a lot further is the regulatory concerns. I think that's caused a major reason why it's stalled a bit. Governments worldwide have been becoming more proactive in regulating the crypto industry. I suppose actions such as the SEC lawsuits against crypto exchanges and discussions to impose stricter rules create uncertainty and a lot of hesitancy amongst investors. That being said, it hasn't held them back. I think crypto is currently trading at about $65,000 today. So there is a lot of upside, but I think it's just been stalled a little bit by even other events such as macroeconomic factors. I think rising interest rates, inflation, and the global economic uncertainties can potentially shift investor focus towards safer assets affecting the Bitcoin growth. I think worldwide we currently are facing huge economic uncertainties and people are trying to park their money into much more safer investments rather than be going into a riskier investment such as Bitcoin. But yeah, over the last few days, I think Bitcoin has risen about $2,000-$3,000 again. So it is starting to gain that traction again. But I think these factors have caused a little bit of the price movement to stall.
Yeah, and of course we've seen also exchange-traded funds like BlackRock. There was a huge amount of Bitcoin flowing in or being bought by BlackRock and Fidelity and Vanguard and others who got licensed for ETFs. But then we started to see a bit of a trickle out of these funds. So there's a bit of trading happening there, and it's been speculated that that possibly has put a bit of downward pressure on Bitcoin price. Do you see it that way?
Well, it certainly could be, right? They all got in at fairly good prices, and I think locking in investor profits, gaining 5, 10, 15% is not too bad for any investment fund. And also for traditional investors who were just starting to get a feel of how the ETFs are working, etc. They're parking their money into Bitcoin and then catching out at a period where they feel is a good return for them and then hoping for a downfall for them to go back into it. So I think that could very easily be one of the factors. And yeah, just other factors such as uncertainty around the world. I think that's another major factor why people are trying to stay out of the market and just kind of being a spectator in order to find out what's actually going to happen for them to start investing again.
Now, I mentioned in the intro about Bitcoin dominance. Bitcoin dominance is the percentage of total crypto market cap that is dominated by Bitcoin. So it was down at 36% about 3 years ago, now up above 50%. Can you explain the significance of this and whether people are getting a little bit tired of all these altcoins, meaning everything that's a cryptocurrency which is not Bitcoin?
Yeah, so the way we'd explain Bitcoin dominance for anyone who's wanting to know is that it represents the total market capitalization of the total crypto market currency. And I think the major reason why we've seen about 50%, especially in this day and age, is the investor confidence in Bitcoin, as well as the large institutional involvement in Bitcoin. So you were just talking about the grayscales of the world investing and opening up Bitcoin funds. I think that's what's caused people to have a lot more confidence in Bitcoin. And also it comes with that is the perceived stability. So sometimes you can see Bitcoin being referred to as the digital gold. So investors perceive it to be a lot safer than other cryptocurrencies. Then we'd go about talking about the wide range of acceptance when it comes to Bitcoin currency, especially with the retailers. There are many payment companies now coming up with new payment solutions that accept Bitcoin, and not many old coins are accepted. So people are starting to keep a lot more Bitcoin in order for them to be able to spend it at their local retailers, etc. And I'd say lastly, why Bitcoin has been so dominant is the regulatory concerns regarding specific altcoins and DeFi protocols. We've seen a few scams come up over the last few years, which governments are trying to regulate, but I think due to that, I think a lot more pressure movement is now going into Bitcoin itself rather than other altcoins. Also, there's just too many options out there. So I think people are starting to just want to go with the safer option, which is Bitcoin. Considering it was the halving event, they thought it would be a lot higher than what it ended up being at. I think those were one of the few reasons why people were investing in Bitcoin, and you see dominance above 50%.
Yeah, the halving event, for anybody who is new to crypto, that is an event that happens every 4 years with Bitcoin, where the rate of issuance of Bitcoin is halved. So a few weeks ago, there was it was exactly 6.25 Bitcoin released every 10 minutes. And that's now down to 3.125. So that constricts supply, and that will continue happening every 4 years. It'll be halved again and again and again. And that is the idea behind this rising price. Ultimately, if you have a reduced supply, you would expect to see demand increase, and that would increase price as well. Just on the regulatory side, because that is important, not just in South Africa, but worldwide. So the Financial Sector Conduct Authority has issued licenses to more than 75 crypto asset service providers. How do you see this changing the crypto landscape going forward? Bearing in mind, one of the reasons that was mentioned for this is to try and eliminate scams. Do you think it's going to work?
Look, I think this is a step in the right direction, and something we, working in South Africa as a South African company, have been hoping for a very long time. I think firstly, it brings about clarity and trust, both between the consumers and businesses, and now they actually know who they can trust and do business with. So I think that's a major step in the right direction, especially when you talk about eliminating scams. Also, now there's increased consumer protection, and that's huge because if you go to the grocery store and buy something and you don't like it, you are protected. So there's a Consumer Protection Act. And I think this being regulated, it falls under the same category as consumers will be protected. And it's very easy to go on the FSCA website and search which company is and is not regulated as a CASP, as the FSP as well. And then I suppose licensing has also promoted standardization of business practices across the sector. So talking about the risk management and the anti-money laundering compliance, licensed CASPs as well as FSPs are generally required to have a very robust AML and CFT, which AML being anti-money laundering and CFT being combating financing of terrorism. So they go through a very robust framework where they have to have all these policies and procedures in place. So it gives clients and consumers, even businesses wanting to transact with cryptocurrencies, that peace of mind about who they're dealing with and that they are doing all their checks. And I think lastly, as South Africa being one of the first African countries to actually implement this, I think it's all about global perception as being one of the leaders, at least a regional leader in the crypto legislation.
Yeah, and of course it will help us get removed from the grey list, which was imposed on us a little over a year ago by the Financial Action Task Force. It won't be the only thing, but it'll certainly help in that direction.
It'll certainly help. It's a step in the right direction. I suppose a lot of money maybe would have been leaving the country with cryptocurrency and going through we saw a few different scams pop up in South Africa. So I think this helps actually regulate the market and also, puts us back in good light, I suppose.
Okay. Now, a lot of people see crypto as a speculative asset class. And of course, that is true for many. It's not true for everybody. A lot of people are buying Bitcoin and just holding it for the long term. But you've been beavering away. I'm talking about 5 West here. You've been beavering away on some other interesting use cases. Tell us about that.
Yeah, so over the years, we wanted to develop so crypto has good utility. It's not only about being a speculative asset class. And that's what we kind of wanted to develop and give back to the people wanting to dabble with cryptocurrencies. I think as 5 West, we did a lot of different products. We've got a crypto payment gateway, which we've actually been it's now being rolled out to different merchants in South Africa. So I think that's a step in the right direction where people holding crypto now have the ability to spend their crypto with online merchants, even retail stores with QR codes, etc. So the same way you go to a store and you've got a Zapper or SnapScan QR code, same way you can now go spend your crypto at a kiosk or at a merchant that is accepting it. And then there's obviously the treasury management solution that we've had for a while where people are looking to de-risk themselves from the local currency by investing in USDT or in cryptos that you can hedge yourself against the local movements of currencies. I think as Rand's been pretty volatile, along with other African currencies over the last few years, it's a good tool for companies, businesses, and even individuals to have in order to be able to hedge themselves. And I think a typical example would just be the arbitrage that a lot of companies are obviously performing in South Africa, where you can send out fiat and then exploit the crypto premium. So those are some of the utilities that crypto has and that you can use and benefit from in the blockchain system. But yeah, other than that, I think it is a speculative asset as well if you want to use it for trading. But there is a lot of utility, and companies like ours are obviously trying to exploit the utility in order to give back to the community.
I noticed that there's a research study just come out, or a report come out from Visa, and I think the company is called Allium Labs, where they say that 90% of stablecoin transactions are coming from non-humans, in other words, bots and large traders, I presume, for the most part. But what was interesting about the study, it said that there was about $2.2 trillion in total transactions in stablecoins. In April alone, that's a huge volume, but only 10% of that was coming from organic payments activity, in other words, humans. Among the companies, the payment companies that are moving into the space, PayPal, of course, and Stripe recently announced that they were moving into that. But you've also done quite a bit of work in treasury services in Africa, where companies dealing with, let's say, the Kenyan shilling or the Malawian kwacha, they would be able to hold their reserves in US dollar-backed stablecoin, and then when they need to spend it, they can convert it back to the local currency. Is that gaining traction in Africa?
Yes, it has been gaining a lot of traction in Africa. Again, we come back to our currencies being super volatile. I think that's been the biggest reason why it's been gaining so much exposure, is people are losing value overnight. Even if you look at the NGN, last year sometimes you were trading around the 700 region. Today it's at 1400. I think it went up to about 1700 a few months ago.
That's the Nigerian naira, right?
Correct, yeah. So the amount of devaluation that's happening, it's very hard for multinational companies to actually work in those regions and to actually make any money from it. And when we had chats with a lot of multinational companies, it's about them not having the confidence to then invest in Africa because they're worried about their investments and the amount of money that they're investing into the country. They actually are losing more from the devaluation of the local currency. So it's helped these companies and even high net worth individuals to just have a dollar-backed balance on their balance sheets and then obviously bring it back whenever they want to. So it's been quite a hit, and I think the market's growing, more players are entering into the market, and along with regulations, I think we've got a long way to go, but I think it will gain a lot more traction in the near future, especially keeping in mind regulations are catching up.
Now, let's just go back to crypto as an asset class. I mean, if interest rates start coming down in South Africa and elsewhere in the world, as is expected this year, that would generally be seen as bullish for riskier assets. Do you see this as a potential trigger for another move up in Bitcoin price and altcoin prices?
Yeah, so a reduction in interest rates is generally seen as bullish for riskier assets, and it could be a potential trigger for the rise in crypto prices. So the lower interest rates typically encourage investors to seek higher returns in riskier assets, which include stocks and cryptocurrencies, amongst others. As borrowing costs decrease, the appeal of traditionally safe investments like bonds may diminish. prompting investors to shift towards higher yielding assets such as cryptocurrencies itself. The lower interest rates also means cheaper borrowing costs, which could boost investment activities. Lower interest rates can weaken, I suppose, fiat currencies, making inflation hedges like Bitcoin more attractive. And also, investors are a lot more confident when it comes to investing in crypto, when it comes to lower interest rates, because they can borrow and then invest for a lot cheaper. And I suppose when it comes to entrepreneurs, you can see a lot more innovative products coming out when there is an interest rate drop based on past research. It's because it can attract more investors, boosting crypto adoption.
Finally, Omar, what do you think are the big events we should be looking out for as we head into the second half of the year? We're now through the halving event, so things are settling down a little bit. But, we've just spoken about interest rates. If we start to see that decline, then we might see some more activity. What's your take on all of this?
Yeah, so I think looking at this year is going to be very interesting, I suppose, heading us into the second half of the year. I think the major thing we got to look out for is the regulatory developments as the market matures and more jurisdictions are regulating crypto. I think that's huge. We should really be able to get more further adoption of cryptocurrencies itself. I think CDBCs, which is gaining a little bit of traction, I think that should be also trialing, and you'd see a few more launching.
Just explain that. Central bank digital currencies. These are a kind of a crypto version issued by central banks.
Yes, and I think that'll be huge in Africa, and I think we are testing it. So I think if those launch and if we even put them on trial, I think that'll be something to really look out for. Also, I think Ethereum ETFs, we know that the Bitcoin ETFs have been coming in quite fast. So I think Ethereum ETFs will also be coming in, which might actually bring down Bitcoin dominance a little bit under the 50 region, because I think traditionally investors might want to invest more. It's a psychological thing. Bitcoin's expensive, so you might want to have a full Ethereum rather than a percentage of a Bitcoin. So I think that might be able to gain a lot more traction for Ethereum and bringing down Bitcoin dominance. So I think that'll be something to look out for. And then I think it's still more people, more institutions getting involved in crypto. I think we're going to see that something on the up. And again, with the Middle East coming out with their own VARA licensing, and a lot more regions in Africa, South Africa did it, and even the US. I think with more regulations come more institutional players, which might bring a lot more adoption into cryptocurrencies, because now traditional investors can invest. And then I think the last thing that I'd really want to be interested in is major exchange updates with new features and more products being added. I think talking about one of the failed exchanges, FTX, and the way they had stocks, etc., on their trading platforms, I think that'll be a really good way to have new features in the second half of the year, so that exchanges also have a little bit more utility than just being able to trade cryptocurrencies.
You're saying trading stocks as well as cryptos?
Yes, correct. It's just you can have a wide variety of products to trade with, rather than just being exchanges being used to trade cryptos.
Interesting times ahead. We're going to leave it there. That was Omar Iqbal, who is the CEO of 5 West. Thank you very much, Omar.
Thank you, Karen. Thank you for having me on again.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.